Hey guys, welcome back to the channel. In this video, I'm going to cover NEOS's new ETF, the NEOS Gold High Income ETF, ticker symbol IAUI. This ETF combines the traditional appeal of gold with the potential for high monthly income. So let's explore how it works and how it might fit into your investment strategy, into your portfolio. All right, guys, but before I do, you guys know the spiel. I'd appreciate it if you smash that like button so the algorithm gods know that I'm here, and hit subscribe if you're new so you know whenever I go live or I talk about finance, news, stocks, investing, or I publish a new video like the one you're watching. With that out of the way, guys, let's get into it. So just as a quick primer for gold and the benefits of actually investing into gold, all right, it is a hedge against inflation. All right, gold tends to hold value when currencies lose purchasing power. So if you were to purchase, let's say for argument's sake, a couple ounces of gold, 24 karat pure gold in the United States, it would be worth the same amount in Europe, in Asia, anywhere else. It would be worth the same amount, okay? This is known as the spot price of gold. So it's worth, doesn't matter what country you're in, doesn't matter what region you're in, gold will always stay the same price as the spot price, okay? So just keep that in mind. That could be a really good thing, especially, with what is going on in the entire world, right? Gold is also a good thing to have if you want some crisis protection, okay? It's a safe haven during economic uncertainty. Right now in the United States, we're dealing with tariffs, we're dealing with economic risk, we're dealing with a possible recession, we're dealing with so many different things, including the devaluing of the US dollar and losing its reserve currency in the world, right? So much uncertainty. A lot of people are flocking to gold to hedge their bet against all of that, right? They're moving out of equities, they're moving out of, higher risk stocks and moving into gold to protect their money. So this is always a good thing for gold holders, or a benefit of owning something related to gold. All right, we also have portfolio diversification. This helps reduce overall investment risk when mixed with stocks, bonds, and even real estate. So, in case stocks fall, typically gold will rise, right? It's non-correlated to the stock market, so that's always a good thing. And then again, it's a hedge against currency risk, all right? It protects against the devaluation of, the US dollar or whatever else is going on. With all this printing of US dollars, an additional $3 trillion worth of debt being piled on, the dollar is, kind of getting devalued. So investors are moving to gold to protect their wealth. So real quick, just a little bit about NEOS. This is probably one of the best fund managers out there. You would be hard pressed to find any negative reviews about NEOS and their lineup of ETFs. They have some of the best ETFs on the market. All right. They sport very good distribution rates and, pretty decent expense ratios, all things considered. So, some of their biggest ones is SPY. You have the S&P 500 high income ETF and QQQI, the NASDAQ 100 high income ETF. Just as a matter of fact, QQQI just won an award from ETF.com for this year's best ETF. So, shout out to NEOS for just being good stewards of people's money. All right. But we're not here to talk about these ETFs. We're, all the ETFs. We're here to talk about IAUI, which is the Gold High Income ETF. So IAUI, which I'm going to just call the gold ETF from now on, because saying IAUI is kind of a tongue twister. All right, it's an ETF launched by NEOS Investments on June 5th, 2025. The primary goal is to generate high monthly income while providing exposure to gold. It achieves this by investing in gold ETPs, all right, exchange traded products, and employing a data-driven call strategy, all right? So let's take a look at the actual strategy. So the fund strategy involves gold exposure, right? This gold ETF invests in physical gold ETPs, such as a Goldman Sachs physical gold ETF, AAAU, allowing investors to benefit from gold price movements. I like this, and I like this a lot. A lot of cover call ETFs, they do that synthetic cover call strategy, and they don't typically hold the underliers, which, again, in my opinion, is not a good thing. I have seen in my own personal experience, the ETFs that hold the actual underliers, they seem to perform better over time. So I'm a big fan of ETFs actually holding their underliers. Okay, we also have option writing. This is a typical vanilla, cover call strategy. All right, the fund writes call options on these gold ETPs by selling call options IAUI collects premiums, which contributes to the fund's income, right? This pays you that distribution. This strategy aims to enhance returns, especially in a flat or moderately rising gold market. Now, people are going to ask, and I know, what is going to be the distribution on this, right? What are they paying? Now, this does not even have enough performance data. This hasn't even been out more than a week. I could probably surmise, because NEOS is such a responsible fund manager, I could probably surmise that they're going to be paying out between a 9 and 13% distribution rate. I could see that as being realistic, just looking at all of their different funds, all of their different ETFs. They're typically within that range. They're not paying out, maximum amounts of distributions, in the 100% or even the 150% or even as high as 30%. They're sticking to about, the 9 to 12% range. Or the 9 to 13% range. So I find that very responsible. All right. They're going to be paying you monthly. This ETF plans to distribute income monthly, providing investors with regular income streams. All right. However, the exact distribution rate and yield are subject to obviously the market condition and the fund's performance. Now, you guys know, if you invest in high yield ETFs, that the distribution rate always changes. It's never steady. It usually fluctuates, sometimes a couple pennies, sometimes 10 cents up and down, sometimes $1. So just keep that in mind. Most NEOS ETFs, from my experience, from my opinion, they have usually been within a decent range of each other. So they're very, very steady. So I like that. And again, you'd be hard pressed to find anything really, truly negative about NEOS funds. All right. Just some fun details. Again, it was launched June 5th, 2025. So that was, obviously yesterday. The fund ticker is IAUI. It sports a 78 basis point expense ratio, which is, it's pretty low when compared with a lot of these other ETF that charge 99 basis points and sometimes as high as 1.04%. So this is good, and the distribution is obviously going to be monthly. So where might IAUI fit into an investment portfolio? All right. Luckily, they included this little bit, so you guys could kind of take out the guesswork, but this ETF could serve as an alternative or a complement to existing gold allocations, which may offer portfolio diversification, protection against inflation, and a hedge against economic uncertainty, kind of what we already covered. All right. Though the ETF can seek those inherent benefits present within gold while pursuing high monthly income within a single accessible ETF. All right. So this is the best of many, many worlds. You're going to get, inflation protection. You're going to get exposure to gold, and you're going to get high levels of income, right? Which is, this is a winning combination in my opinion. So let's take a look at the top holdings. And this is why I'm a big fan of ETFs that actually hold the underlying. So we can see here that they're holding a bunch of UST bills, which is pretty common of most, ETFs, if not all ETFs that do cover calls. They use those T-bills as kind of collateral for everything. But these short-term government securities provide stability and liquidity for the ETF. We have the Goldman Sachs Gold ETF AAAU at a 24% weighting in this portfolio, where T-bills is at 74%. I am a big fan of this. I really, really do like that they hold the underlying at almost a quarter of the entire ETF, right? And then, of course, they have their option positions. You guys can see them down here. They have a couple different option positions for, it seems, July 18th, which is kind of way out there. But we'll see what happens, all right? We'll see how this fund performs. And if we scroll down a little bit more, we can see the potential benefits of utilizing option-based ETFs. You're going to get high monthly income, lower correlation to basically the stock market because of, what the underlying is. But, of course, we need to see the performance data over time. If we actually look at the gold price, we can see that gold is up almost 27% for the year. This is the best performing asset year to date. Okay, this beats Bitcoin, this beats real estate, this beats the stock market, this beats the S&P 500 and QQQ. Right, this is really, really a good asset to hold in people's portfolios, and this obviously crushes bonds. All right, bar none. This crushed a lot of different assets. This should tell you that a lot of investors are, going through FUD, fear, uncertainty, and doubt about, the current situation in the economy, with all the talks of tariffs, recession, et cetera, et cetera. Okay. So hopefully things will level out as, the months drag on. But I can see gold continuing to, pump and reach new all-time highs. At least I think so. So that'll pretty much do it. IAUI might be suitable for investors who are looking for exposure to gold with the added benefit of income, diversification for their portfolios. And, this ETF combines a strategy of traditional assets with option-based income generation, which is always, well, I won't say is always, but I think is a very good thing. Not too many gold cover call ETFs on the market that are actually really good. So for NEOS to come out with one, a lot of people are waiting on this one. And, NEOS just being a good steward of people's money, they kind of keep in mind everything that's going on with their funds. I could see this one being an absolute banger for people's portfolios if they want exposure to gold. So with that being said, guys, I'm going to call it here. I hope you enjoyed the video. I hope you got some value from it. I hope you're excited if you're, into gold, if you're bullish on gold, and if you're bullish on the U.S. economy, probably going into a recession, or if that fits your, investment thesis, then, this ETF could be something that, could fit into your portfolio. So with that being said, guys, you guys have a wonderful day. Let me know what you think down below in the comments, and don't forget to hit that like button. I will see you guys in the next video. Take care.